Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, June 23rd, 2025. Let's take a look at the charts. Start with the big picture. As always, work our way into the day itself. This is a 5-year chart, weekly bar chart, showing really the low 350s, still an overhead resistance area we would need to close above in the coming weeks to set off our next long-term buy signal, wherein we would anticipate then 516.58 in the months to follow. This could be 3 to 5 months, could take longer, but if we close above 354.23 at the end of the week, I would expect the low 500 region as a long-term target. Until then, this market can continue we tested the low 350s, as you recall, about 3-4 weeks ago. We spent a couple of weeks in this zone, and then we fell away. Our target at the time was this rising 3-month channel bottom that is now at 298.72. You could see how we even spent a couple of days, 2 or 3 days above this low 350s at the time, but it really is the weekly settlement that does win the day, so to speak, that does sort of carry the underlying buy signal information that we look for. Without the weekly settlement, it's a no-go. And this was a bit of a no-go in that we did close, spend a little bit of time above it for a few days, only to collapse back later in the week, and then we sold off big within a matter of 2 days. This big sell-off was the Trump-Musk feud that played out in social media, and we did then test what was considered a 2 to 3 week target at the 298.72 formation. Took about 2 to 3 days. 298.72 is still our base of support that, if tested over the next few days, over the next couple of weeks, can contain selling through July, at least into July, and from here we can round back up into the low 350s. I'd mentioned how we could spend the next few weeks, the next better part of 2 months, trading inside of this 298.72 to 351.39 area. They do converge entirely late July, so between now and the end of July, over the next 3 to 5 weeks, one of them is going to give way. I have no idea which one will. And so let's jump to the day itself. We've been topping out for the last week and a half, better part of 2 weeks, at the 5/8 upside Fibonacci at 331.61. This is still a sellable area. It's 5/8 Fibonacci from the high that was put out in late May against the more recent June low. It's performed pretty well. I mean, we opened above it at one point and closed back below it. It's a settlement-based system, so if we were to close today above 331.61, we would expect within the week, within several days, a retest of the 351.39 to 353.23 area, which is a rising 2-year channel top and a upside 50% retracement from that December high against the more recent April low. The 50% 351.39, the 2-year channel top 354.23 can absorb buying.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
On a weekly basis, quite possibly through July. And from there, we can fall back to this channel support at 298.72. We could trade inside of this for the next few weeks, but if we close, well, let me get back to the day itself. I don't want to jump the gun too much and miss important items. Holding below, once again, 331.61 will keep 298.72 in reach by the end of next week or sooner. On the way down, I do have 310.68 as an intraday support level. This is a solid level for day traders. 331.61 is also a solid level for day traders, but also 3 to 5 day swing traders who might anticipate 298.72 as an objective following a test of 331.61. On the way down, 310.68 should be respected for its ability to contain intraday, potentially daily selling pressures. 310.68 is a solid day tradable level. If we break 310.68 today, 298.72 is in reach perhaps. It could also be a settlement today below 310.68 that sets up 298.72 tomorrow, Tuesday. 298.72 able to contain weekly selling pressures, possibly into July, and from here we can round up into the low 350s again within 2 to 3 weeks. But if we close below 298.72, I don't mean to get too dramatic, but I do think that that could very well be this rising flag, this rising channel bottom at the base of a move, which you really can't appreciate because we don't see the highs that preceded it, but it is a rising channel structure at the base of a move. Classic sell signal if we close below it. You really can't assume that it's going to be a setup for a long-term sell signal. You can't jump the gun, in other words, until we close below 298.72, because until then, we could actually close above 353.23, 354.23, which, as I've said earlier, would set off a long-term buy signal, and you could then forget the whole rising flag at the bottom of a move. But if we close below 298.72 over the next week or two, I would expect within 3 to 5 days, 272.87. That's a 5/8 Fibonacci that actually held nicely a couple of weeks ago in combination with the channel bottom. They're now diverged significantly. Within 2 to 3 weeks of closing below 298.72, I would anticipate the low 220s. This 221.86, I think this low area in reach again. This could also be 3 to 5 weeks. And then ultimately closing below 298.72, I think the 160s should not be discounted as a longer term possibility. Now I still have 272.87 here as a support level, and that is sort of the final shoe to drop on a long-term sell signal. So I just want to keep this here because you never know exactly how this may play out. We could close below 298.72 and bottom out at 272.87, not only for a day, but for a week, and round our way back up to this channel bottom and perhaps push back above it. I mean, these are the things that can happen. But if I'm looking at the odds, I do think that if we close below 298.72, the odds do favor, by a degree, a long-term sell signal that I think could ultimately play out way down here on the chart in the 160s. That 159.95 5-year channel bottom. This is a long-term structure. As far as I'm concerned, this is the base of support for Tesla. As long as it holds above this structure, it remains, I don't mean to be condescending, but in reality, I think it remains a viable automobile manufacturer in the United States. If we take out 159.95, well, you know, I don't want to get too negative on Tesla, but I don't think it's a pretty picture moving forward as we continue into 26, 27. Until then, this is a solid zone to buy into. We can round up from here significantly longer term in the months and years to following a test of 160. And yes, I do think you can play the 160s if we close below 298.72. You could also wait for a settlement below 272.87. Once again, I think that is the final shoe to drop on anticipating the 160s. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. We offer stock picks 2 a week. You should check out. We've been hitting it pretty hard, nailing some really good signals. There are several that are still in play, pending over the last few weeks. Adobe Systems, Lam Research, AMD last week. I could go on and on. In fact, a couple of weeks ago, we did 3 in a week. You could also see our daily triple Q and our daily SPY analysis. You know, that will be that. I'm going to leave it at that for Monday's Tesla report. You have a great day.